Charles is here with the business news now. He's starting with a look at the stock markets today, Charles.
In Asia, we're seeing the major bourses trading lower after seeing initial gains in the session this Thursday. The Nikkei in Tokyo leading the losses, as you can see there. Tech stocks dragged down after U.S. software giant Oracle shared disappointing cloud revenue after promising massive AI data center buildup. In Europe, the major bourses are opening mixed this hour. All this quite interesting as investors were eyeing the U.S. Federal Reserve's last rate decision of the year, which fell on Wednesday. The central bank opted to cut rates by a 0.25 percentage point, which is ordinarily well received on the markets. But Fed Chair Jerome Powell also saying in his remarks that with this new rate cut, the Fed finds itself in a position to now wait and see how the economy evolves, whether it's sticky inflation or worrying employment figures. Luke Schrago has a story.
Jerome Powell is still walking a fine line as the chairman of the US Federal Reserve announced a cut to bring the key lending rate to a range of 3.5 to 3.75%.
The Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals.
That marks the third consecutive cut of the year and possibly the last for some time, as the US central bank seeks clarity over both the job market and inflation, still 1 percentage point above a 2% target. Given the recent government shutdown, Fed officials had less data than normal to work from, likely adding turbulence to an already divided committee, split over cutting rates to boost hiring or holding steady. Ordinary Americans, though, are fed up with elevated inflation, with consumer prices having jumped 25% in the 5 years since COVID. What's more, job gains have slowed as unemployment has risen for the last 3 months to 4.4%, low but still the highest level in 4 years. All this as Powell continues to face political opposition at the highest levels.
We have a deadhead Fed hair. I mean, this guy, the head of the Federal Reserve, is a stiff. He did a rather small number that could have been doubled, at least doubled.
Powell's term ends in May, meaning he'll have until then to further chart the Fed's course, something that may prove a little easier with the backlog of government economic data to get through by the next meeting in January.
Now on the news, Trump once again giving his opinion on a potential Warner Brothers takeover.
The U.S. president signaling that he'll oppose any takeover agreement that doesn't include new ownership of news channel CNN, which he's long been critical of. CNN's parent company, Warner Brothers Discovery, is the subject of a bidding war from two potential buyers. Streaming giant Netflix, which wants to buy Warner's streaming and movie businesses, but spin off CNN and other TV assets into a separate entity. And Paramount Skydance, which has made an offer to buy the entire business, CNN including. According to the Wall Street Journal, Paramount Skydance's CEO David Ellison, son of billionaire Oracle founder and Trump donor Larry Ellison, has promised Trump he'd make sweeping changes at CNN if he took control of Warner Brothers. Take a listen to Donald Trump.
I think any deal should be guaranteed and certain that CNN is part of it, or sold separately. But I don't think the people that are running that company right now and running CNN, which is a very dishonest group of people, I don't think that should be allowed to continue. I think CNN should be sold along with everything else.
Donald Trump now. Finally, Sean's going to end on some very topical data regarding Venezuela's oil industry.
Interesting to look at this in light of the U.S. seizing an oil tanker off the coast of the South American country on Wednesday. This on the grounds that it had carried sanctioned Venezuelan and Iranian crude. The move comes amid escalating tensions between Washington and Caracas, with accusations that Trump wants to oust the regime of Nicolas Maduro, a regime whose lifeblood is oil revenue, which brought in between $1.8 and $2.2 billion to government coffers in 2023 and 2024, according to some estimates. But that oil revenue has been hurt by sanctions and isolation over the past few years. Production's dwindled from its 2015 peak, when it was worth about 2 million barrels per day, to today, where it's more than halved to 750,000 barrels per day. And while the U.S. used to be the main buyer of Venezuelan oil, that has also changed over the years. In 2025, the main buyer of Venezuelan crude is China, with about 400,000 barrels per day. The U.S. is second and continues to purchase crude, as they've given special export licenses that are exempt from the sanctions, notably to Chevron, to continue operating in the country. So a mixed picture here, because U.S. sanctions are clearly hurting Venezuela's ability to produce more oil and generate revenue, but U.S. exemptions are also providing the regime with much needed revenue on the other hand as well.
Yeah, good analysis for you there. Charles Pellegrin, our business editor here on France 24.